The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here. This is the Tiger Technicians Hour on this Friday, the 18th of November. And I just thought I'd do this right. I've been doing this all week. I've been showing you my Chapman Wave techniques live. I thought this is the only way you can actually talk about it. Some of these techniques I think should be core to any technician's analysis process, just because it has to do with numbers. It has to do with all the stuff that we look at. So in this particular instance, what I try not to use Fibonacci only. I use it because so many people have really made a living from the Fibonacci. I don't disagree. There's nothing that I disagree with at all. It's just the use of it, and I find that I use it to a certain extent. One of the things that I like is a 300% extension. And that's on the Fibonacci, but I'm not sure it's a Fibonacci number. I've actually put it here. I think I actually put this in. So 300%, we've done that in the E-mini. We've pulled back, and now instead of holding it, we've broken down. One of the reasons that I've been talking about this is a 1 minute chart. One of the reasons why, and also in the Chapman Wave, we're always looking for peak Ds. The buy signal gets upgraded to a buy mode, the implication being that it should take you to at least a peak D, and then other things can happen. Well, lo and behold, the low at 320 or so this morning, up 320 this morning at 39.43.50, gave you a crossover in the 9-period moving average. I wasn't up at that time, but it went positive at 4 o'clock at about 39.50, and it has not gone negative. It went all the way to the high of 39.94, round number high, at 8:30 this morning. Double topped. You see I drew in the vertical lines here. Look how weak that second test was, and that was a peak D. And from the peak D, remember the objective in the Chapman Wave is to get you from a buy signal that upgrades to a buy mode. The implication is that there should be at least 4 higher peaks. And go to E, can go to F, and go to G. D and E is where you really start to become quite careful, and you do an assessment. And what happened is it went to that D with a doji candle, tiny doji candle, always a clue, and it failed on the retest, and then it crossed negative. This is a 10-minute chart, and the 10-minute chart crossed negative at 9:50 this morning at about 39. I'll give you the worst-case scenario. Let's say 39 right there. So it was at about 39.73, and it's remained negative since then. So not bad. Just using the 39, even if you go from the worst case, 39.56, that's even if you had to wait, even if you're not using the peak Ds to get out, or even go short, that's a really nice technique, a nice way to do it. And now what we're looking at is the Dow is up 60. So let me run the numbers now. Here we go. The Dow, this is crude oil down $3 at 78.53, made a peak D. Look, the left side, right side price time match from that peak B right there, around about the 9th or 10th of October. Retested around about the 7th or so of November. And look, that MACD was good. Stochastic was lower than the left side high of the 9th or 10th. And the stochastic immediately turned down. And here we are, probably going to make a 1-to-1 to the downside. And if you use the 85.42 200-period moving average, that would suggest 77 is better hold. Otherwise, it's a real problem because it could take out that left side low that was made back in September or October the 1st, round about in the 74s. Okay. Now, with that said, let's go back to the Dow, the INDU. I want to get this done quickly because there's just so much I want to do. I've got a whole bunch of stocks that people were asking about, and we'll go to that. So we're looking at the Dow, 33,987. I've been talking about it all week, saying I think the 33,900 is going to be very strong resistance. We went all the way to 33,987. I've got that as a question mark. Is that a peak F or is it an alternate count F/B? We don't have to make a decision right now for subscribers. We've taken just a little bit off one of our 3 times long Dow positions. Our core, we're not touching that, our core position. Besides the core position from 2020, the low back on, I think it was April the 3rd, at just about 211, just under 211, the diamonds, they're now trading at 336. Don't want to touch that at all. I don't want to touch the core position that we got into the day after the low of 28,660 on the 13th. I feel very strongly that the low of the 14th that we've got in the 290 under 300. At this particular point, I'm going to try to keep that as long as possible, but on a very short-term basis. It seemed to me that the rolling correction, on the upside correction, where the Dow was leading, and then finally you got the QQQ and the SMH as semiconductors running sharply. Now everything's run its course. It's just time for a breather. It's time to take a rest and assess. And that corresponds to the weekly chart. Well, today's Friday. Is there going to be a doji candle here at a leg A that goes to a peak A? Because next week we have no new high, no recovery high, that is. Look, the doji candle of August the 6th, the week of the 19th at 34,281 gave you a sharp pullback to a lower low from 29,653 in June down to the October low of 28,660. And what we're looking at is the 9-period moving average has crossed positive. The MACD is very strong, ready for some kind of a breather, but very strong. Stochastic is under 80%, and that's really not good. And on-balance volume in the weekly chart is pathetic. And the monthly chart has broken, but we've got a whole month to go. It's never too early to be wrong in making a decision about a candle in the time frame that it's in, because even at the last minute, I've seen monthly candles go from very negative in the last 2 days, especially as happens in June of different years. There's just been a monster move to the upside, and it's changed the candle completely. So all I can say is at this moment, the Dow monthly candle is a gray leg A, meaning it hasn't given any real positive buy signals, but it's gray and it's moving higher. And if it can close in November, 1 day, not even a week, just 1 day above the high that was made at 34,281.36, and that would be really important, and that would suggest that this has legs to go even higher. But let me just do this. I wanted to talk about it, and I forgot completely. All week I've been wanting to say, the Dow, in one of the worst months, I mean, besides the COVID period, but in news, in yields, the quickest the yields have ever skyrocketed in such a short time frame. The Dow, 36,952 was the all-time high. The low was 28,660. I'm not dismissing that at all. 8,000 points, that is huge. But wait a minute. We're at 33,644, 3,300 points off the all-time low in one of the worst years in news-related, and time. That is really long. And it speaks to the inner strength of the stock, like a super tanker. It doesn't turn on a dime. It takes a long time to turn. I'll be back. Dow is up 97. S&P's up 6. Basil, Chapman, Tiger, Technicians Hour.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're almost done with all these indices. So what we're talking about is that some kind of a digestive moment. I didn't want to do anything going short, anything like that, just a digestive moment after such a big move, and we'll see where this candle gets us into Friday of next week. If there's a new recovery high, I think that's a really good sign. If it fails to make a new high, well, we'll have to see what happens during this. Very often we talk about Thanksgiving, markets move up traditionally, but actually they don't always traditionally move up in Thanksgiving. What I have been saying is that my analysis over the years, decades, has been if the Dow can survive the September-October usual declines and close at almost the year high, the last week of October, the first week of November, my experience has been that the market holds up very well going into the end of the year. Maybe not all the way into December 31st, sometimes right through, but it holds up going into a good part of December. So we'll see what happens here. So within that context, let's just run this quickly. S&P pulling back after hitting an F/B technical. There's an alternate count in the Chapman wave right at the 200-period moving average. No big deal, just a little bit of a pullback. But the weekly chart is really not that good. Even here, it hasn't broken out in the weekly downtrend line, the one that I call the Chapman wave inside track repellent zone. To do that on a monthly basis, we would have to get to about 41.30. And here we are at 39.54. That's a long way to go. Look at the QQQ. NDX 100 trading vehicle down 25 cents now, 284.56 at a peak D with a 1-to-1 bar symmetry. It went right to it and broke for the 2 days above and pulls back. And it held the 9-period moving average yesterday. But look, it can't get out of its Chapman wave inside track repellent zone. Looking at the IWM, much nicer daily chart than the Qs. And the weekly chart's improving. I want to see in this reverse head and shoulders, I want to see it breaking above the weekly high of 190.94 in the IWM Russell 2000 ETF, small caps. If it can close above that even just once, that's 190, let's call it 191. If it can close above 191 even for 1 week, that's going to be that'll really help. But the stochastic's still only at 48%, and that's not going to get it to anything but 57% maybe. So there's a lot of work to be done. That's the reason why I'm saying don't get too excited. This would be a fantastic move up. And that's the reason why taking some profits has been very beneficial. Build up the cash position, and the next bit of a pullback, you can start to add it back. Look at the gold. Gold is down 6. Very nice action right at the 200 period moving average. This is a peak B. It should go to C and D. So far, I'm looking at gold on a pullback to see which gold stocks we would like to go long. We haven't done that yet. We missed out a really good opportunity early on. But some of these gold stocks, look, here's my it's the ASA that I always look at as just a benchmark. Sometimes we buy it, sometimes we don't. For subscribers to my opening call, ASA Gold and Precious Metals. Look at this big pullback, makes a peak D. We're always looking at peak Ds, makes a peak D high in the 14s. Now it's trading at 13.25. And look at the weekly chart. That's not particularly good. Look at silver. Silver at this particular point, the continuous contract pullback to the 200 period moving average from a peak E. Oh, I never did this as a left side, right side price time match, but it made a beautiful cup formation, actually a lopsided. The rectangle makes a lopsided gravy cup. Oh, gravy cup for Thanksgiving. Very good. And leg C in the weekly chart, a much better looking daily and weekly chart than the gold. Monthly chart is just okay. Did a second 1-to-1 to the downside. Now it's rallying, but it's holding better. High-grade copper, woo. Big pullback from an F/C. Looks like an F at this point at 3.66. And looking at the dollar, DXY, dollar is rallying a little bit. It's up 23 ticks at 106.89, just coming off the 200 period moving average, like many of the other key areas that we look at, pulling back from the 200 period moving average. Looking at EUR, USD. This is the euro-dollar currency pair, stalling at a peak F right on the 200 period moving average, leg C in the weekly. Not a bad looking chart. Monthly is terrible. Look at the USD JPY. This is the yen currency pair, peak D top, a beautiful left side, right side price time match arch formation, but it did fail. If I did it to this little series of doji's candles right here in September, end of October, beginning of September, that's one thing. I chose the cluster formation. I like to choose a cluster formation. I did that earlier on. If I can just show you chart to chart. So this is the E-mini rallying after going down sharply. That wasn't the one. Let me see, was it gold? Gold had left side, right side price time match right there. And it took a little longer to break down under 1755. It went down to the 1752-ish area, and now it's at 1757. This is a 10-minute chart. Did I do, yeah, what else did I do? I don't think I did the dollar. So the dollar's made a low right here, a beautiful second cup formation, arch formation, lowercase h goes to a lowercase m, and now it's gone peak A, peak B, peak C, D, it's in leg E to the upside. I would say that in this particular case, my target would have been the left side high of 1235 on the 17th at 106.94. Today's high so far is 106.90. So that would have been the first area of resistance that we'd be looking at. Let me just go back. ESZ22. Yeah, there's your peak D in the E-mini, and we've pulled back. Oh, here's the cluster formation. This is the area that I'm talking about, that I used the left side, right side price time match. It got there way earlier and broke it, went under the 200 period moving average. Now it's hugging at 39.65. It's hugging the 200 period exponential moving average. Question came in. Could I look at natural gas? I'll do that in a minute. This is a 10-minute chart, so let me get out of that. So we've looked, look, here's a low. This is peak A, peak B in the E-mini chart rally. Where would I say the target could be? It's a 39.65. If it doesn't take out 360 support in the next 10 minutes, but actually rallies to 39.69, I would say 372 would be my upside target. And natural gas, I think that's what they were talking about. Natural NG. There we go. So what's the objective in the Chapman wave? Is to get you to at least a D well from this low that was made right here in natural gas, double bottom at 6.045, 6.045. That's 9:23 and 9:23 a.m. this morning. This is a continuous contract. We're in peak A, peak B, peak C. Look, it crossed over positive right there. That was at 6.079. I mean, is this a technique? This is one of the reasons why I say sometimes I like to look at 2-click sessions. So let's just say that you were able to get this. That would be your click right there at, even if you were delayed, let's just say you got it at 6.129. It's trading at 6.28 right now. It went to peak A, peak B, peak C, peak D. And this becomes an instant restart, that way instant restart. So all you do is you have a parallel count saying, if I get to G, I'm calling it G/C. That's the notation. And that should still take me to a D. So it goes E, F, G/C, and lo and behold, I didn't even put this in because I was busy at the time. There's your D, and now it's pulling back from peak D. Is that not a nice tick? And right now, as we're talking, at 6:28, it would have, if you use just this one technique, it would have taken you out for.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
We're looking at the euro-dollar currency pair, and a couple of questions came in, and I'm just trying to think. Oh, yes. So here we go. So I mentioned crude oil that was pulling back very sharply. Crude oil, there's a continuous contract. A very sharp pullback, and it's making an arch formation in the weekly chart. So let's look at Exxon. Question came in yesterday. I didn't have a chance to do it. And it said in the next, since the earnings report, it's kind of retested the high. I call this in the weekly chart leg D, potential peak D today, and a Chapman wave 2-bar reversals. One of the techniques that I've used for a very long time. I use it in conjunction with other things. I like it just to be there. I wouldn't base everything on this reversal pattern, but it becomes very important if there's any confirmation that there's a potential for this. So this, what it means is, Went to 114.66 on November the 8th. It pulls back under the 14-period exponential moving average. The 9 is way above the 14. It's still very bullish, but I said watch out because my notation and other things are suggesting that oil is starting to pull back, and it will affect the oil multinationals and probably the oil service sector as well. However, what we're looking at here is that the next high within 5 sessions becomes 114.64. 3 cents from going to a leg E, a double top if ever there was. But if I do a measured move, vertical move, like that, right there on the 114.66 high and on the 114.64 high, I have to look at it very closely to see that the MACD had turned down, not viciously, but it turned down. Stochastic now was under 80%. And the on-balance volume is still keeping the price up because it's holding very well as the 9 above the 14. So this is an ongoing process. And that's the reason why I never thought, until I get signs of whether or not it'll be a sharp pullback, I said I would not be looking at the short side. However, this might be the opportunity to be looking at either puts or doing something with the options. I'm not doing that right at this moment. I'm saying to you, let's look at the other stocks. Look at the CVX. CVX made a peak F doji candle. It's like an evening star, but in the meantime, back at the ranch, the technicals are weak all the way around, except for the 9 being above the 14, and that's really important. And there's only a leg C in the weekly chart. Look at the OIH. This is the oil VanEck Oil Services ETF. Makes an alternate count G/C, and I always say think of it as a G, but there's a possibility it's a C. The same as with the Dow. I said to subscribers that I have to now consider that it's an F/B, an alternate count at this particular point. But the thinking hasn't changed about the consolidation that's unfolding. All right. So in going back to the OIH. OIH is just suggesting leg C. Now, this also could turn out to be, in the weekly chart, look at this. We went to 322.31 on the 11th and 322.79. So this is still leg C. There has been no pullback. So the high that was made is G/C says, okay, don't do anything yet other than what I've been talking about for at least the last 2 weeks to say, take a little bit off. Just money management says take a little bit off. You can always plan to put that exact amount back, lower down. And that's exactly what I'm saying here. I think the oil service is giving a hint that at some point there could be a sudden slide, but it could be a sudden slide that holds in a rectangle formation after the arch has been made and holds in the 283 level. So 17 points, yep, that's a nice percentage. But to go short, change your long positions. No, I just don't see that right at this particular moment. Because I did that. Next question came in, could I look at Cisco? Cisco has been on my list for a little while as one of those stocks that could, in fact, give very good clues as to rotation within the tech sector. So Cisco systems, 5G and cybersecurity subscriptions, they made a transition some time ago. It seems to be working at this particular point. So I like it very much. But my statement was that it's at the 200-period moving average. I can see it going to the 47s. Today it actually hit 48.04 in leg D. And it's kind of consolidating. And I wouldn't be surprised if it comes back into the 46 to 45, even maybe touch 44 area, if there is weakness. But what's really most important is that in the rotation, if you look at a Microsoft, where did I type that? All right, I'll find it in a moment. I'll put it again. Let's do it again. And if you go to Microsoft, MSFT, there it is. There. Okay, good. It's not acting nearly as well. So I would be looking at the weakness of Microsoft and the strength of Cisco to say there's a divergence. Look at IBM. Is this not look at this. You talk about Salesforce, and the guy keeps coming on to TV and being interviewed by Jim Cramer, and it just goes on forever. And I said over a year ago, well, a year and a half ago, let me just go to, what is it, CRM. I spoke about this a long time ago. I said, there's This is very interesting. They had that skyscraper in 2021, in January, I think it was. And yes, there was a bit of a pullback. But in 2022, in November, at 311.25, he started, whatever his name is, Benioff, started talking about social issues. He's written a book and he's got this and he's got that. And I said, oh, man, just don't lose your focus. You've done a fantastic job with Salesforce. And look at what's happened to the price. As he's busy talking social this and social that, I'm not saying that's bad. I'm saying it's bad for a CEO to lose his major focus and start talking about other things like Tesla, like what's his name with Tesla. I've been talking about that for ages. I said he's just completely lost his focus. Therefore, Tesla is probably a short for quite a while to come until he gets back in focus. Well, same thing with Salesforce Cloud. Well, IBM has cloud, and look at this chart. IBM has cloud. Look at this chart. Type it on the chart. There it is. Is this not beautiful? And IBM, I said a long time ago, I would not be surprised if IBM is the last of the major companies. I mean, this goes back to the 1920s. One of the major 1930s, I think. One of the major companies that sees one of its metamorphoses change it from a stodgy old stalwart to an innovative company. I think that's happening in IBM. We are not long IBM. I'm thinking on the next big pullback, we might consider leaps. That's like an option that doesn't expire at a much lower price. And look at this. It's a beautiful chart. It's just you can't compare it to Salesforce.com. So here we are looking at different things. So I'm saying Cisco is on the list of the changing in this particular time frame, the change in sector leadership within a sector. And this is what is acting much better. So yes, I like it. It's a little tough now to buy it at 47.67 in leg D. Oh, that's where I typed Microsoft on the chart. Sorry, but Cisco should be on your list, and maybe you could nibble, and then have a real buy on the next big pullback. But I would still have a stop. This is not a market that you can just ignore having stops. Okay. And then I said I'd look at SMH, which is SMH's. At peak F, pulls back, stalls on the 200-period moving average. I'm watching this closely. So Applied Materials, did they come out or are they still to come out with earnings? Oh, I haven't updated this. So Applied Materials makes a peak G way in the 160-something area back in January, plummets down to the 70s. Wow, that's more than cut in half. Has a good rebound. And this is the weekly chart, and it's trying. Oh, it didn't do it. It needs to close on a weekly basis above 111.65, the high of 19th of August, the week of 19th of August. Dows up 145.77.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, so when we're looking at charts, look, it's 1 minute chart for 2 bars, actually 1 bar. It went negative, went pink on the natural gas, and then it kept running up and it went to a doji high. At this point, I'm calling that E. I put a question mark because it could recycle, and underneath it we could get ABC. This could become a new buy signal, but I don't have evidence yet to say that it is. So, and what is happening is that in the 10-minute chart, we've gone from a peak A to a peak, remember, uppercase letters on the way up. And the stochastics at 86%. So this says, technically, I should put in an up arrow saying the 10-minute chart is in a buy signal, very close to a buy mode. I need just a little bit more evidence to say that it can go to a leg C. It is above. If I had to do this, remember, I like to look at patterns as if they are either cups or arches or rectangles. In this case, it's a lopsided gravy cup. Keep talking about the gravy cup because Thanksgiving's coming up. There we are. And it's rallied sharply. So this is the level that I would have done. I didn't do that because I was doing other things. So from here, where I would choose a particular candle, and I do a left side, right side price time match. That's pink. The next one's green, and see if it's able to get there. At the same time, I would be down here. I wouldn't even know what's going on the right. I'd put that in over there on that particular candle, my rule of thumb candle. At the same time, I would go from the left side, the particular low bar, and I draw a diagonal line that goes up to that particular edge of the, let me see if I can do that now. Here we go. To that particular edge of the rectangle. And that rectangle extended just a little bit. And you can see that's my Chapman wave inside wedge target resistance line. It works much better if I go to a previous candle. And you can see it's gone above that and it's held very nicely. So the NG, the natural gas contract, 10-minute chart suggests that it should go to a C into the 6.40s, and maybe it could even reach a leg D going to the 6.42 area. So this is what I'm saying. I'm showing this live because I said I'd do that all week, show the Chapman wave methodology. Now let's try to do that here with applied materials. So applied materials, if it has a strong rally for the rest of November, then my target would be looking at this. If I make this a left side, right side price time match, that could work. So I always have to test it out. And I have to go here, make it green, right there. Oops, I had a question. I'll get to that question in a moment. S&P, I'll have to check to see what the question was. There it is. So that says, using this particular technique in the Chapman wave methodology, here's your resistance line. It hit it exactly twice this week, this week and last week. Here's my lopsided cup formation from there. going to there, going all the way to the right over there. Technically, it should start here. It should, the ellipse should start over here, and the choro, which is the semicircle right side, the quarter of the semicircle, should. But I don't do that. I like to treat it as much as I can, just as looking at a cup formation that takes you from the left side, swings all the way to the right side, and that says the 120 to 121 level should be reached in applied material sometime by the end of December. Okay, and that would also imply that any close under 95, it's at 105 right now, would negate that. But at this particular point, on a weekly basis, for the first time, the 9-period moving average is crossing positive. All right, let's go back to the questions here. I did that, did Cisco, I did IBM. Oh, what I didn't finish on Cisco was to say that the support level is in this rectangle formation, but this little cup, this arch formation that reverted to a cup formation right here is suggesting that it doesn't have to pull back all that far. It was at the 46.76 200-period moving average resistance just yesterday. Now it's above that. So I treat the 40, all of the 46s down to 45.50 as the key support on the shorter term. So looking at this, you could just maybe start a little position here, but you really want to be buying it under the first real entry of any importance is under the 46.76 200-period moving average. Okay, next thing, Basil, thoughts on GS. We'll do that. The Goldman Sachs. Oh, I think I missed. No, I want to go in order. It's not fair. Now, the question came earlier on, and I forgot to write it down. 10:05. So that's me. So let me just check. I just want to check to see any, if there was a particular question, and I said I'd get to it, and then I never did. So could I show the chart of XOP? Yes. XOP fits into the category that I was talking about a moment ago, and that is the category of the S&P oil and gas. That has not gone to a new all-time high, recovery high, over 170.62 in the monthly chart. But I've got this as a leg C under the previous peak G high, around about 170, made in June. I think it was in June. So here we are in leg C. But the daily chart had a peak C. Now I'm adding this D, E, and it too, like the others, has made a peak F. I'm calling it an F for now. I'm putting a sell signal in place, not a sell mode, just a sell signal saying digester phase. But 145, it's at 152, 145 for the XOP is my short-term target. But the monthly chart and weekly charts are suggesting I don't have anything to say that it shouldn't go higher. So it would just be a moderate pullback. Next question is Apple. So Apple is stalled at the where? At the 200-period moving average. Is it important? Let me show you how important it is. Look, it was a magnet back in August, September, October. October it finally broke down, came back, and it went to a peak T just above the 200-period moving average. Couldn't hold it. It went from 134.75 back in early October to a high at the end of October of 155 something, and then it comes back to 134.28. Is that just not a fantastic thing? Double bottom, triple bottom, because 4 days later it goes to 134 something else. And now it's trading at a peak A, stalling at the 200-period moving average. So Apple is the one that I'm looking at and saying, I can see that this goes into a sideways trading band. And on the lower side, I would consider that it's a buy for a bounce. And until it can break into the 163s, really just get away from this resistance area and above the 200-period moving average of 151, it's just stuck in a range. But a range-bound stock is not a bad thing in an environment like this. You could treat it maybe better than bonds, I suppose. But yes, until Apple, I'm looking to see the next move down to the 144, 142 area. Is this maybe for subscribers who want longer-term positions? Is this a buy because the next big move should try to take it into the 107, 160 area? I'll analyze that as we move along. But I do have a target of 116 as some kind of in this the bear phase for Apple would say 160. It doesn't have to get there. I just said that it's going to February.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Let me just do this before we finish. So I'm actually waiting to hear from Larry how he's doing, and I've sort of wiggled things today to be able to, just in case at 1 o'clock. If he can't do it, I might come back in at 1 to do a live show. We'll see what happens. But in the meantime, that pullback from the E-mini is hugging the 200-period exponential moving average in the 10-minute chart. And I drew in the arch formation that goes from a lowercase h to a lowercase m, but it's making rising highs and rising lows in the 1-minute chart. It's just kind of stuck. And as I say, I just think that we're in the digestive phase. So Goldman Sachs is holding bottom, made a peak D. It's pulled back. It expanded above the 300% extension that I always like to see. It's gone much higher than that. So I'm just going to get rid of this because for me at this particular point, I have to look at other things. And this is a very, very, this weekly chart is strong. It's in leg B. The monthly chart is in the gray leg B. It hasn't given me any signals to say that it's going to go to the all-time high in the four, I think 15s or so. But in the meantime, this is great action. This is just saying to me, the public is kind of coming back. If you look at the IAI, look at that. It looks like the Goldman Sachs chart. Very nice pattern. This is the iShares Broker Dealer Security ETF, which we are long. So in the meantime, back in the ranch, we're looking for some kind of consolidation. I think it can continue for a little while longer. Anything that you're looking to buy, just make a note of it, and you could split your entry points so that you get in here in case the market suddenly goes up even higher. But I do think it's a consolidation phase. It deserves it. It needs it before the next bigger move to the upside. And that's what I'm looking at. One quick thing is the VIX index, because it is coming to a Friday close. VIX index is way down at 23.58. It's down 35 cents today. It's just telling you that the security of having insurance has lightened up, and that makes it allows the market to move up. Meantime, hold tight. We've got Steve Rhodes coming up, a recorded Steve Rhodes coming up, and then great shows all day. Check out my opening call daily newsletter, and I will see you Monday.